Hi everyone, welcome to the Quantum Bridge. We have another new guest with us today. Nicholas is with us. Welcome to the show.
Hi there.
So Casper, I believe it's an important time for precious metals, and that is what we're going to be discussing today, I believe.
Yeah, absolutely. And also welcome from me, of course, to Nicholas. Welcome to our audience, to the Quantum Bridge. Yeah, I mean, not surprisingly, we have been talking about gold and silver with a number of people, most of them actually outside that world in terms of their jobs, but those who are ploughing in whatever they do have into this area, one for security, and secondly, because of this whole thing of sovereignty and the decentralization rather than the centralization of sort of power and wealth, and whatever that means to them. So Nicholas, who's from the Pure Gold company based in the UK, he is very important to us at the moment because he's again somebody who's seeing this shift from maybe more traditional buyers of gold over the last sort of decade to those over the last few years who are now coming in and fairly new to this. So go easy with us, Nicholas, but it's lovely to have you with us. And if you could give a little bit of background to yourself and the company, we can then jump in and talk about what you've been seeing.
Yeah, of course. Well, thanks very much, guys, for having me on the channel. It's always nice to do these recordings. But yeah, so we're physical gold dealers here in London. I mean, people are buying gold at the moment really for safety and security. It's about wealth preservation, getting their money out the bank, protecting what they're lucky enough to have, and obviously keeping ahead of inflation. At a bare minimum, and as I was saying to you when we first got on, Casper, this isn't about getting rich quick or making a quick buck, becoming a millionaire overnight. It's purely about decentralization, protecting yourself, and becoming your own bank. Because at the moment, the banks don't have your money that they say they do. They're completely illiquid. They're insolvent. I mean, they've proven that over the last 8 weeks, and they're gambling with your money and not paying you anything for it. Because you look at the inflation rate at the moment, the government are going to tell you it's 11%. It's actually above 20%. So not only is it not safe, they're inflating in a way through the back door with a nefarious tax. And that's just the state of the economy at the moment. And it's only going to get worse and worse. So this is why people are looking for physical gold, to get it into their hands, decentralize, and put it obviously into an asset class that historically will always keep ahead of inflation, giving it long enough. But when the economy does collapse, obviously gold goes up exponentially, as you know. So just a bit of background into us as a company and how we operate. We're not an online shop or a transactional type website that sells paper gold or ETFs or anything like that. We're an investment company. We only deal with the physical metal, so physical gold and physical silver, and we either deliver that to you, or alternatively, we can store it in vaults that we create on your behalf, either in London or in Zurich. What makes us unique as a company, what really wins us our reputation in the industry, is the fact that we offer things like buyback guarantees. So whenever you come to liquidate that gold in the future, we'll guarantee to buy it off you immediately with any profit that you've made. We've never bought back below the gold price on the day of sale either, so the spot gold price. Whereas if you were to go to a traditional gold dealer or jeweler, for example, they typically be buying that gold back at 4 to 5% below that level, which a lot of people aren't aware of. So what that means, of course, it is, I suppose, that gold in your hands, it is just as liquid as any cash you've got sat in a bank. The only difference is you're not exposed to that counterparty risk, and you're not exposed to those inflationary pressures. Of course, you get certificates of authenticity with all the gold that you buy as well. We're official dealers of the Royal Mint. We're wholesalers for them. And yes, you can obviously do this completely privately, which is so important, and completely tax-free as well. Now, I think a lot of people that start looking at physical gold or come into the space aren't quite aware of it, but there's a caveat to a British law, which means you can't tax the flow of currency. So as such, if you purchase legal tender gold bullion coins in the UK, there's no capital gains tax to pay on them. They work in exactly the same way as your ISA does, just without any restrictions as to how much you can put in. Now, because there's no public register of them, there's no taxable reporting obligation on them. That obviously gives them complete privacy as well. And that for so many people now in this day and age of centralization and obviously the advent of CBDCs and the implications that's going to bring later on down the line, that's just what's so important about gold. And that's only applicable for UK residents as well. Nowhere else in the world can you buy physical gold and do it completely privately and tax-free. And you think it's quite bizarre, really, for the UK, because everything here is taxed to the hilt now. There's no exemption for anything, but with physical gold, you've still got that loophole. And that's obviously, it's very appealing to our client base too, because you're lucky enough to get 3% in the bank, and you're probably going to pay 45% of that over in tax as well. So in real terms, you're still losing out at 17 to 18% inflation. So yes, that's the benefit of doing it in the UK, and that's why London's the physical gold capital of the world, really, which a lot of people aren't aware of.
It's not the same for silver, that is it? I don't believe there's a VAT and capital gains on. Well, it's a bit different if you're buying coins and bars, isn't it? I think. Yeah.
That's it, Gary. Yeah, well, it is applicable for silver as well, because you can also buy silver coins. And because those have got the king's head on now, as opposed to the queen's head, they're legal tender. They still qualify for that exemption. You're right, bars don't. You pay 20% capital gains tax on the bars. But VAT is where silver is charged at 20%. Yeah, you're absolutely right. And that's because, well, the government still consider it an industrial metal. And as such, you've got to wait for the silver price to go up 20% before you're even back in the green. So taking delivery of silver in the UK doesn't really make any sense at all. And that's why we offer storage in Switzerland as well, because if you keep it in a bonded vault outside of UK jurisdiction, it means that you're not liable to pay VAT on it either. If you were ever to have it delivered and it then obviously goes through customs, you'll end up paying the 20% VAT. But if you keep it offshore in that vault, you don't have to pay the VAT or the capital gains tax either. It's the only way of getting around it with silver. But at the moment, we're seeing a lot more demand, Gary, for gold than we are silver, because it's got the proven track record. In times of monetary crisis and bank failures, it's always gold that goes up, whereas silver is a lot more volatile. It's an industrial metal. It's a lot more speculative. For every 1% increase you see in gold, silver will go up 2.5%, and vice versa. If gold dips, silver usually comes down a lot too. So if you're looking for purely for safety and security, your better bet is with gold. But obviously, if you've got the risk appetite and you've got the ability of maybe holding it for 5, 6, 10 years plus, a lot of clients will also diversify and add silver too, because it gives them another string to their bow. And if you look, I suppose the most comparable time to now, if you look back in financial history, is probably the 1970s in terms of inflationary pressures and money printing, which is obviously when they last came off the gold standard in order to fund the Vietnam War. Back then, when they opened up the money taps, the gold price went up 1,000% in 9 years. Silver price went up 2,500% in that period of time. I know that sounds crazy. It's a mad statistic. Yeah. It really does go up quite dramatically when you start to see inflation kick in. So yeah, I always say to clients, if you've got the ability of holding it for the very long term, certainly add some silver in there as well. But if this is just about protecting your money, your better bet is with gold.
I mean, this might be just speculation. How do you feel about the ratio of silver to gold, and that traditionally it's a lot closer? I'm not sure what it was. Yes. Traditionally, was it 15 ounces of silver to
16 to 1?
Yeah. And now we're looking at what, I don't know, 80 or something.
Yeah, 80 plus.
Yeah, I mean, like you say, in that risk thing, do we see that gap maybe closing? Who knows at the moment in the world we're in,
No, that's a really good point. A lot of people don't know that, Gary, but silver is so hugely undervalued at the moment. Traditionally, 16 to 1. Now it's above 80 to 1. So a lot of the analysts are saying it should already be worth 3 times more than it is at the moment, just based on those historical averages. And then, of course, Look, most of my clients don't agree with green 2030 and net zero and everything else, of course. I mean, it's all just a big globalist con in order to take more money away from people. But the analysts are saying if we're going to go down that path, the electric car batteries, solar panels, catalytic converters, at the current rate of demand, there's probably not going to be enough silver left in the next 7 to 8 years in order to sate that industrial demand, let alone the investment grade demand that we've got coming through as well. So yeah, that just adds fuel to the fire, I think, in terms of silver's long-term price appreciation and potential. But silver can sit there for years and years and years and do absolutely nothing. It can be very, very boring, and all of a sudden it will jump up very dramatically. So yeah, if you've got the patience to do it and hold it for 5 to 10 years, it's certainly a good bet, particularly given how undervalued it is. Yeah.
Thank you for that, by the way. That was great insight. What about in terms of the other metals? I appreciate that generally they've been more expensive. I mean, there's certainly the likes of platinum, and then you've got palladium, which has been a really interesting one. If you got into that not long ago, it was actually quite cheap comparatively, and of course has gone skyrocketing since. But do you do much in the way of any trading with the other metals, or is it predominantly gold and occasionally silver?
99% is gold and silver. We do platinum and palladium as well. It's a lot more difficult to get hold of, and again, you've got to pay VAT on them in order to take the delivery. But because they're very illiquid markets in the physical space, at least, it means that you'll end up paying a lot of money for them just to get hold of them. So the spread on those particular products is going to be very, very high because not as many people are coming back to us to buy and sell them. So because they're illiquid markets, they're expensive, and you've got to pay tax on them. Occasionally, we've got clients that do want them, but it's only about 1% of the business. Right.
Okay. And in terms of the comparatively, when we're talking about gold, and I think it's very kind of you to touch on the silver area and the other metals when they're not your mainstay. But in terms of gold, what are you seeing, particularly the sort of audience that we believe, at least, that we have, people more like us who are coming in and buying whatever we can. Now, for Gary and I, that's mainly been silver, actually. But, you know, there are people out there who could probably get together enough funds to buy a reasonable quantity of gold, maybe a couple of coins, maybe a bar and whatever. If they're in that space and thinking about that, between buying coins and buying the bars themselves, how do you see that land lie, and maybe a little bit of quote unquote thoughts, maybe not advice, but certainly thoughts around that area? And then also this thing about being able to trade it back. And you've touched on that wonderfully as well, this ability to be pretty liquid with gold, actually. Is it maybe better for people to be thinking in terms of smaller denominations in case at some point they feel, or they're pushed into a corner and they have to actually get out of it without giving back all the gold and selling back all the gold that they've got? How would you, for people who are coming to this more recently and maybe aren't absolutely wallowing in cash, how would you position it for them?
There's no hard and fast rule as to our typical client base, I wouldn't say, Casper. I mean, I dealt with a nurse on Friday. She bought a couple of grand from us. I dealt with a hedge fund manager a few months ago that purchased millions of pounds from us. So everyone's looking for protection. There's no maximum, there's no minimum. But in terms of the actual products themselves, you're right. More people are now looking at what we call fractional gold, which is smaller denominations of coinage. Because look, if things really do hit the fan, which I think most people are of the opinion that they are in the foreseeable future, they've then got the ability to trade out of very small little amounts of gold, instead of having to sell one large gold bar and then being left with cash that you'd rather still have in the investment. It's not divisible, it's not flexible. If you come to sell a gold bar back to us and it's 50 grand, our ability to then resell that on is quite restricted. You're selling to a much narrower group of people, whereas your average Joe and Jane is looking for small, divisible, fractional amounts of gold that, yeah, if we do end up in a hyperinflationary style crisis, just like in Weimar, Germany, for example, they can then pay for their goods and services rather than rolling around with kind of barrels full of cash. So yes, the uptick that we've seen in very small kind of denominations of gold coins, like a quarter sovereign, for example, I mean, they weigh just 2 grams. That's now become one of our most popular products for that very reason. I had a farmer a few months back now. This is at the end of last year. He purchased about 800 grand's worth of them, and he buried it in his back garden.
Yep.
Left a treasure map for his grandkids, all of the small fractional golds. He knows full well they're not going to be inheriting that for at least kind of 15 years or so.
Yeah.
How much is that gold going to be worth in the future? Well, look, if it does go up a 10x, even with that very, very small gold coin, it's still going to give them that divisibility and flexibility. So no, good question, but a lot of people are buying small gold coins now. And again, if you've only got £1,000 or two to expend, well, they cost you 130 quid each.
Yeah.
Is that the smallest denomination they come in, quarter ounces, or do you do small?
When it comes to the legal tender ones, yes. I mean, you can get very, very tiny ones, but they're more collectible. I wouldn't get into kind of gold-plated coins or commemorative coins or anything like that. From the raw mint at the moment, and we only deal with raw mint coins because they're the only ones that qualify for the tax status. That's the smallest you can get.
That'd be like Britannia's, isn't it?
Yeah, you can get Britannias as well, but they're just a little bit bigger than your sovereigns. So you can get 10th ounce Britannias, or you can get quarter sovereigns. Quarter sovereigns, I mean, almost half the size. But in terms of buying bars, Casper, I always say to my clients, look, there's no point in doing it. You're getting the exact same amount of gold. It's just one's in the shape of a circle, one's in the shape of a square. If you buy a gold Britannia or you buy a 1 ounce gold bar, one's tax-free, the other's not. So why would you ever go for the bar? That's not to say we don't sell bars. We do. We sell them to corporate clients. All of our pension gold has to be in gold bars. The government won't allow you to put bullion gold coins in your SIP. So we have to do gold bars in people's pensions. Some people will make, sorry guys, I think my television's just come on here in the background. Apologies about that. I'm just going to go and turn it off.
Well, yeah, I mean, I'll just show to the audience that you can get, if I can, you see that?
I think you may. Yeah, that's it. Yeah, great.
Sorry about that, guys.
Yeah,
it was
just
a bit of
showing
background
the audience
noise.
here what you're saying, that we get a 1 ounce coin, or you can have the same weight as in a bar. So
exactly.
It's yes, it's a choice.
So when it comes to gold, just to clarify that when it comes to gold, of course, if you're doing it between the coin and it makes sense as a private investor, by the sound of it, to always opt for the coin option. And I appreciate it. But by the way, Nicholas, you've touched on that area. So I think that's probably for an entirely separate show to go into detail. But if you wouldn't mind just touching on what you're seeing in terms of people coming across to gold with their pensions as well, because that is where most of us have got at least something, or think or hope that we might have something, if we've got a small private pension perhaps, where we might have, and we might even be able to get hold of some of that tax-free at some point. Certainly for people in the UK, about a quarter of that I believe you can actually take as a lump sum still at a certain age, tax-free. Are you seeing a lot more people moving across to actually a pension that's based on or backed by gold?
Yeah, absolutely. It's something that you couldn't even do a few years ago. Most people aren't even aware that you can do it, because most traditional pension providers, well, they won't allow you to put physical gold within your pension, because they can't make any money out of it. There's no opaque trading fees or anything, short of kind of sitting outside of the vault under armed guard. They can't profiteer from it. So that's why they've got no interest in adding gold. Yes, it's something that we're now capable of doing. We had to jump through so many regulatory loopholes, etc., in order to do it. But yes, we can now. The Royal Mint also provide the service where you can, but obviously a lot of people don't like doing that because of privacy concerns, etc. They want to do it through a private business for their own fully allocated and fully segregated vault that we keep on their behalf. But yes, we've seen a huge uptick since last year. I mean, the pension market nearly broke in October when they came out with a surprise budget and they announced those tax cuts and everything else. It took the market by so much shock that the bond market broke, and the Bank of England had to come out with an emergency bailout. No one was quite aware of the ramifications of that and how serious it actually got. I mean, so many pension funds nearly went under. People nearly lost everything unless it was for that emergency bailout. When the Bank of England does that, it just prints more money, it socializes the losses, and inflation carries on going up. So if you don't want risky bonds and equities in your pension, you're getting close to retirement age, or even if you're in your 30s or 40s, if you hold gold there for 15, 20 years, it's going to outperform everything in the very long term if you've got the patience to do it. So yeah, we've seen a huge uptick in the amount of people doing that. But I think it's just becoming aware that you actually can, because most people with their pension, they haven't got a clue they can do it.
Yeah, what a fantastic point to make, actually, that a lot of this and a lot of about what we hope that the Quantum Bridge does is to just share that awareness. I mean, people don't have to act, but if they don't even have the information, if they don't even know that there's the potential to take what could be incredibly risky portfolios, who knows, you know, at a time when almost anything seems to have a huge amount of risk, even those portfolios in terms of pensions that people might think are fairly solid and have been sold to them in that manner. You know, this is a way of saying, no, actually, this is tangible, it's physical, it's not a number on a screen. Exactly. In terms of that, actually, Nicholas, I should have asked that question before, really. When people have their vaulted silver or gold or precious metals with you guys, whether it be in the UK or Switzerland, do they actually, is it allocated in terms of there is actually something that goes along with that that says this is your actual coin or actual coins? Or
yeah, so we're not allowed to sell gold that we don't have. So legally, we're not allowed to rehypothecate it. Yeah, which is basically what the banks do with your cash in the bank. I mean, they've got less than 1% of cash reserves. It doesn't exist. Now, with physical gold, yes, it's not kept in our vault or with any other clients. That's fully allocated and fully segregated in the client's name, in their vault, under their name alone. Now, God forbid anything were to happen to us as a company, well, it wouldn't have any bearing on the safety of their metal because they could go down to the vault and get it. And that's fully insured as well by the Lloyd's of London syndicate. And it's audited by Deloitte every 6 months as well. So in terms of safety and security, it's second to none, because I suppose there's a breakdown between church and state. You're buying the gold separately from the people that are storing it for you, separately from the people that are then insuring it, and then separately from the people that are auditing it to check that it's there. So there's no incentive for any one of those parties to ever lie about what's in there, because you're not buying it from them in the first place. So yeah, we've gone to every effort to make sure that's the case, because you'll see out there that there's a couple of other companies, but they keep all the gold in one huge vault. It's not allocated, it's not segregated. There's no delineation or demarcation saying, oh, well, this gold belongs to this person. So if they ever went into administration, there would be huge questions about who owns what. So yeah, look, you pay for what you get. There is a cost to that. Right. Depending on the amount that you want to do, and it ranges from anywhere between 0.65% up to 0.95%. So it will cost you, but look, if the gold price does what it did in the last crash in 2008, well, it tripled in value in 4 years. If you're paying 0.5% a year, I mean, it's a small price to pay for that safety. But yeah, if you take delivery, as long as you do it above £1,000, there's no cost at all. But if you keep it in storage, of course, yes, there is a cost.
And that's understandable, because as you rightly point out, that's a service. And if people are aware of that and they know what the price is, it's just a question of saying yes or no, or they can take the physical metal themselves. I think for many people, they just don't want to have that. You know, not many of us would want to have that sitting around. Funnily enough, Gary and I and other broadcasts that we've done, we've often said this thing of the gold and silver, even if we only happen to have a couple of silver coins, there's something intrinsically about the metal itself that makes you value it. There's something human about that connection. And it's so different from this thing of tapping a card when you buy something, or even using cash, but certainly tapping a card or making a transfer online. And there's something also about the mentality that you start to want to save it and to grow it and to buy more and whatever, because you actually feel you're getting something. that thing, that sort of notional aspect, and it is, as you've just touched on, in the banks anyway, it seems these days pretty notional that you've got anything anyway. But there is a beauty to actually collecting and storing and saving gold, and for the legacy. So you mentioned the farmer, which was a lovely example, Nicholas. Have you seen, or are you hearing in your conversations with your customers, more people talking about legacy and about having something of real value to hand on to their families?
Absolutely. When it comes to inheritance tax planning as well, I mean, it gives you that flexibility, should we say, but a lot of people are doing this for their kids in order to leave a legacy, to get it out the system, and get it, like you said, rightly, in something that's physical, that's tangible, that you've got autonomy and control over. And like, yeah, there is something very psychological about getting that money in your hands and realizing what that's actually worth, rather than some hypothetical numbers on a bank account. And I think what's worrying most people at the moment is the solvency of the banks. We had 3 banks in the last 8 weeks that have collapsed, and they've lost more in financial assets than the 25 banks that we saw collapse in 2008. It's huge. This is the highest interest rate increase, or the most aggressive hiking cycle, should we say, that we've ever seen in human history. Over COVID and lockdowns, they printed money to infinity. That's now caused rampant inflation, and now they're trying to combat that with rate increases. But the more they do that, the more it's going to affect the solvency of the banks. It's looking like Deutsche Bank is in a huge amount of difficulty at the moment. The UK, our government here have now put 7 banks and building societies on a government watch list. We've got no idea which banks they are. They won't tell us, through fear of creating some kind of a panic or a run. This is the same watch list that Northern Rock started its life off on. Right. So it's looking likely that the banks have breached their capital adequacy ratios. They haven't got the money that they say they do. Yeah. And look, if you look at NatWest, for example, I mean, this is pure speculation. I'm certainly not suggesting NatWest are definitely in trouble, but we've just seen the largest short position taken out against them by a hedge fund. I mean, that's huge news. A big hedge fund is predicting that NatWest are going to fail. People, I think, naively think they're covered by that 85,000 deposit protection limit. Wow. There's not even enough money in that scheme to cover a small regional building society going under, let alone the systemic risk that we've got in the system. All the banks have been changing their terms and conditions over the last few months to accommodate for bail-ins, not bailouts. They know there's no magic money printer coming to bail them out. And what that means, just in case your audience don't know, is that bank gets into financial difficulty, well, they can just suck any undisclosed amount of money out your bank account and convert it into equity in a rapidly deteriorating bank, a rapidly deteriorating financial institution. Same thing happened in Greece and in Cyprus. So people are now becoming aware of this. The situation is only going to get worse. This is the tip of the iceberg in terms of bank failures that we've seen. Most people think, oh, that's the end of it now. It's not. These situations always take 6, 7, 8 months to play out. We're only 2 months into it. So I just don't think a lot of people are aware of how much difficulty the banks are in. And then they're not going to publish a list of dangerous banks for everyone to kind of see, and because that would perpetuate the problem and make it even worse. Yeah. So, going back to that, I think just get your money out of the bank. And even if it's just 10 or 20% of your overall net worth, just get it into gold. You can always cash it in the future whenever you want. If you've got it in storage, it's simply a case of picking up the phone to us. We can have the funds back in your account within 2 working hours. If you've taken delivery of it, which I highly encourage most first-time investors to do, so you can actually, you do get it in your hands. Well, look, we can send a courier to pick it up, depending on the amount that you've got. Yeah. Or alternatively, you can just send it back, Royal Mail, special delivery, tracked and signed for. From start to finish, it'll take no longer than about 48 hours to have the funds back in your account. But that's probably even a lot quicker than most banks at the moment, because you try and withdraw $5,000, it's like the Spanish Inquisition. They won't let you have it.
Yeah. We had that as well. Right, I'm noticing that we're running out of time. Nicholas, that's been fantastic. We will, of course, put your details in our show more section. We're only ever on this show giving people the information about the people that we are working with, trusting, like, and whatever. Of course, it's for them to make their own decisions. We're not giving advice in any way, but it just seems to all of us that the more we get this information out, at least people have the balanced ability to make a decision with some knowledge and awareness, rather than just this thing of just watching as their savings are getting eaten away, which is, you know, nobody should be going through that. It's incredibly painful for all of us. So, Nicholas, hopefully you'll join us again.
I will do, of course, by all means. So if anyone, any questions on the audience, if you want to email me, you can do so at nicholas@thepuregoldcompany.co.uk. So the Pure Gold Company. I'll happily get on the phone to anyone that has any, particularly if this is the first time. And no, thanks very much both for having me on.
No, it's been an absolute pleasure. And do take Nicholas up on that. And again, we will put all of the details in our show more section. But I think this ability to see people, to get their vibe, and to get a sense of whether you gel with somebody is so important. So Nicholas, again, for now, very nice to see you, and hope to see you again soon. Thank you very much.
You too, Casper. Thanks very much, Gary. And yeah, I'll see you both soon. Pleasure.
Thank you.
Cheers.
Bye.